What's up, everyone? Welcome back to another episode of Cryptic Crypto, where we are demystifying the crypto asset space. Now, today we're going to be doing a little bit of technical analysis, some TA. I want to be covering candlesticks and Heikin and Ashi. What are the differences? What are the benefits? And then we're going to be comparing it back to the Bitcoin charts. So if that sounds interesting to you, please hit the like button, subscribe, and hit that notification bell to get all the latest updates. This is going to be episode 1 of a series that I'm going to put on YouTube, which is for technical analysis. So if that interests you, please stick around. All right, guys, let's jump into it. So we're going to be looking at first off, just what are candles? And when we look at the charts in Bitcoin, which we'll get to in a second, you'll see what I'm talking about. But to just jump into it really quickly, what is a candlestick? Well, a candlestick chart is a method of displaying the historical price movement of an asset in time. Each candlestick represents a certain period, depending on the time frame selected by the trader. For example, if you set the D1 chart, each candlestick stands for 1 day. So D1 is 1 day. The charts you can change around, and I'll show you that in a second. Inside of TradingView, you can do, by the day, by the week, by the month, by the year. You can really break it down on whatever kind of time frame you like. You can go by the hour, 4 hour, 1 hour. So you can get as detailed or as zoomed out as you'd like on the time scale. Now, just to go into what exactly a candlestick is, so if anyone who's not familiar with trading or looking at charts, this is the typical chart pattern that you're going to see is called a candlestick, and they call it a candlestick because it, somewhat resembles a candle. And the way you read these on the chart is you look at this, and if it's red, it had a daily close lower than the previous open. And if it's green, it's bullish candle. It had a close higher than the opening price. So you can see here, these little wicks up represent the highest price during that day. And the wick down represents the lowest price during that given trading day. Now this is called the body of the candle. This is in the top of the body, depending on whether it's closed higher or lower. So for the bearish candle, it opened here at this price. It looks like it could have gone up during the day to a certain level. It went down as low as this level, but then it ended up closing below the open. So the entire candle is red and it's a bullish candle. And here's your open and here's your close. Now you can see when you move over to the bullish candle, it's the opposite. So you have a situation where you've opened here, and by close, you're actually closing higher, which is a bullish indicator. And you can still see your wicks up and your wicks down, high and low during that day, but the result of that day was a higher close than it had it open. So the whole candle is green, which is a bullish signal. Now I wanted to show you this one because this is the baseline, and this is what a lot of people use. But I also wanted to get into the Heikin Ashi formula and bars. Now this is just an alternate pattern that you can use. Alternate candlestick is really what it's called. It's the Heikin Ashi. And what this is, it's just a different formula that they use to calculate the close, the open, the high, and the low. So instead of using the actual numbers, they're using this formula. So the Heikin Ashi formula, normal candlestick charts are composed of a series of open, high, low, close, OHLC, candles set apart from a time series. The Heikin Ashi technique shares some characteristics with the standard candlesticks, but uses a modified formula of close, open, high, and low. So you notice here that there is a difference. Open, high, low, close, close, open, high, low. So the way that these are calculated in the Heikin Ashi formula is the close is 1/4 of the open plus the high plus the low plus the close of that current bar, so that day, the average price of that current bar. And how they calculate the open for that bar is 1/2 of the previous bar plus the close of the previous bar. So you're actually using the previous month or whatever your time horizon is for the open. 1/2 the open of the previous and 1/2 the close of the previous. So it's the midpoint of the previous bar. Now, the way you calculate the high and the low is you're taking the max of the high, open, and close. So whatever your max is there. And then for the low, you're taking your minimum of your low, open, and close numbers. So really it's just whichever one is lowest there. And so now that we have somewhat of an understanding of what candlesticks are and then what the Heikin version and calculation of a candlestick is, we're going to jump into the Bitcoin charts and really just see how that relates. So the first one I want to jump into is just the traditional candlesticks here, guys. And you can see I've broken this down by the month. And what I was talking about earlier is you can break this down by week, day, 4 hour, 1 hour. I mean, you can go all the way down to 1 second. I don't know why you would want to go to the second, but you can do that if you so please. For the ease of this description and explaining this to you guys, I'm going to use a month. And you can see here that the traditional candlesticks is kind of all over the place. You can see back in 2020, November and December of 2020, when we were in the bullish run, you can see 1, 2, 3, 4, 5, 6 straight monthly bullish candles, followed by that slight dip we had, and then back to the upside, which is kind of the fake out. And now we've been in this bear market for a while. So when you're looking for trends with the candlesticks, it's a little bit more difficult, and I'll show you why when I compare it to the Heikin Ashi here in a second. But there's no real, it's difficult to get a read on what to do here, especially when you have 3 bars down and then you have 2 green back up. If you were to buy again in this green bar when you have a green month, thinking that we were going to head back up for maybe 1, 2, 3, 4, 5, 6 months again, you'd be wrong, because it'd be a fake out and we'd go back down the other way. So really, guys, this is just giving you a snapshot of the prices that happened during that month: high, low, open, close, and that's basically it. A lot of people like this version, but there are other ways like the Heikin Ashi to give you a little bit better technical indicators of when to buy and when to sell. So if we go into the Heikin Ashi side, so I'm going to jump into the difference here. So you can see how this is green, red, green, red, green, red. There's no real strategical way to look at this and buy. Now, if I look at the Heikin Ashi, you can see how much more concise this is. Now, I want to start by looking at 2018, when we were just finishing this bull run in 2018, and you can see the bear run starts. And you can see 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 red candles in a row that lasted for over a year, about a year and a half. So if I were using this Heikin Ashi candle sticking as a strategy of when to buy and sell, this is actually going to give me a better indicator and give me better results. So if I say, okay, once I see the first red bar, I'm going to put a sell order in and sell out, and then wait until I get a green bar to buy back in. So you would have waited out the whole bear market, bought back in around the lows, around $4,600. And if you would have done the same thing and sold again at the first red bar that you get, you would be up. I mean, this is in 17,000 range. So that would be an increase of 13,000. Now, it doesn't work perfectly. You can see here, if you would have done the same thing, there are 2 red bars followed by 2 green bars. It's not perfect, but it is a little bit better than the candle sticking. Again, if I would have bought here at the green, now this is just a different scenario. Instead of selling, I could buy when I see my first green, and then wait and sell when I see my first red. Now, if I would have done that, I would have bought at $8,900 and sold around 48,000. So you can see the dramatic difference here, and that would be an increase of about $30,000. And then again, you come over here and say, okay, well, I can sell at my first red candle. Well, you sell at 52, and we're still in this bear market. We have still not seen a green candle yet, and we are in December of 2022. Our last green candle was in November of 2021. Now, if we repeat the same type of pattern that we did from 2018 to about April of 2019, we're going to see about 14 red bars. So we're at 13 here We might be in for one more in January, and I'm expecting this to have a reversal in trend. But we'll see. But I'm really looking for this first green bar to come here and see where we go from there. But this is, I think, a little bit better technical indicator for belt buy and sell signals than the traditional candlesticking. And you can just see how clean the chart is compared to the traditional candlesticking, where it's a little bit more difficult to understand a strategy here. Now, one more thing I want to note is when we are on an uptrend like this, you will notice that you don't see any down wicks, lower shadows on the greens. I can't say any. You see maybe every now and then there's a small one here, but traditionally you really don't see many down wicks. You just see big up wicks when we're in this bullish trend. Now the opposite is true for the bearish trend. You see these big down wicks, but you see the lack of the up wicks on the bearish signals. So that's something else to look for, guys. And when you do start to see these weird ones right here, you can somewhat expect maybe some sort of reversal, maybe not. But it is just a trend to say, okay, something major may happen here, whether it's up or down. And you can see when you had a wick up and down right here, a major downward trend happened shortly after. So these are good things to look for. And I expect in the next month, if we do see a reversal trend, you're not going to see many big down wicks. You're going to see more of this type of only the upper shadow and no lower shadow when we're back in this bullish trend back up. So guys, I hope this helped you understand how to read charts a little bit better. We talked about the candlestick and the Heikin Ashi. Again, if you would, hit the like button, hit the subscribe, get the notification bell. If you enjoy the content. Only a small amount of my viewers are actually subscribed to the channel. So if you would, please subscribe, and you can always change your mind later. Until next time, guys, have a good one. Thanks for watching. Bye-bye.